Hello everyone. This is the pre-market report video for today 15th November 2023 for the Indian stock market in terms of Nifty and Bank Nifty. On last Monday, I haven't made my pre-market video due to the academic work. I apologize. So in very short, I'm planning to cover 3 days of data. Hope I won't confuse. First of all, on last Friday, US afternoon time, all the S&P funded companies released the earnings. Then at that time, London Stock Exchange Group calculated the overall S&P funded earnings and released the report that it increased its earnings by 6.3% in the last September quarter compared to a year ago. In comparison, on October 1st, analysts estimated and expected S&P funded earnings to increase only by 1.6%. So 1.6% versus 6.3%, it's like overachievement. I mean, regular viewer might remember this. In the midway, they said earnings expected to increase 3% and after some around end of October expected to 4.5%. Now in the end, it was 6.3%. Because of this, despite the hawkish speech by Fed chairman on last Thursday night, on Friday, US market closed over 1.5% positive. In line with that, on Sunday, our market closed over 19,500, but that was completely wiped out on Monday. That's a different story. However, on Monday night, no event, so US market closed more or less flat. Then coming to last night, before their market opening, US Bureau of Labor Statistics released the consumer inflation for October month. On month-on-month basis, it haven't increased at all. It's 0%. In comparison, the expectation was 0.1% increase and it was way less than the last month 0.4%. On year-on-year basis, the data came as 3.2% against expectation of 3.3%. On September month, it was 3.7%. So, consumer inflation dropped from 3.7% to 3.2% in 1 month. In US, already earnings was really good. Now inflation was also dropped. Because of all those reasons, last night US market closed crazy positive. In the end, Dow Jones up by 1.43%, S&P funded rallied 1.91% and Nasdaq also rallied to 2.37% positive. In case of US VIX, from above 15, it decreased near to 14. Basically, US market increased on the basis of strong fundamentals. And also regarding 10-year bond yield, it too dropped and moved below 4.5%. Coming to oil, there was a de-escalation of Middle East conflict in the last 2-3 days, so it increased 2 to 3% compared to last Friday. At the end of this video, Brent crude oil is trading around $82.5 per barrel and WTI crude oil is trading at $78 per barrel. In case of Indian ADR, in line with the US market, all 4 closed positive. In that, Infosys, HDFC Bank and Wipro closed around or over 2%, but ICICI Bank was up only by 1%. So, in plain sight, it's all very good. But if we calculate arbitrage to the Indian spot market, then Infosys and HDFC Bank still indicating positive of over 2%. However, Wipro arbitrage is just 0.5 to 1%. And in case of ICICI Bank, it's flat or mild positive, not 1% kind of positivity what ADR is showing now. Regarding GIFT Nifty, today early morning it closed at 19,740. Considering 70 points premium and equating with our spot market, kind of indicating gap up opening of 230 to 240 points. So that's about the global market. Let's move to the India specific. About institutional activities, again on Monday, FII net sold for approximately 1,250 crore rupees, while DII net bought for 830 crore rupees. So no surprise here and I don't want to raise the hope, but like to highlight this. In the last 3 months, I mean between August to October, in the first 10 trading sessions, FII did net sold for at least 10,000 crore rupees. But this month, not much. It did reduce to around 7,500 crore rupees and also there was a massive reduction in trade volume. It's kind of indicating that they start to think that they were wrong in selling on the first place. Anyway, moving on. As per stock open interest, Glen Pharma, Tata Chemicals, Page Industries, Divi's Lab, Voltas, Crompton and Sale got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Hindustan Copper, NTPC, BHEL, Coal India, Canara Bank and ONGC got an increase in open interest with a positive price close, indicating long build-up. Finally, for the longer term, Goldman Sach upgraded Nifty to overweight from market weight. They cited domestic retail people increased participation and very good earnings growth as a reason. It means simply they expect Nifty to trade positive in the short term of 6 months. They haven't given any value, but they said they expect Nifty to maintain 12-month forward PE ratio of 20 with 17 as a support. As a summary, US market closed crazy positive. For now, GIFT Nifty indicating the gap up opening of over 200-230 points. In case of ADR, HDFC Bank ADR, Infosys ADR and Reliance GDR all indicating 1.5 to 2% arbitrage and Wipro indicating 0.5% positive. However, for some reason, ICICI Bank was not that positive. If it trades positive today in Indian market, then that will create arbitrage opportunities in US ADR side. Basically, it's the other way around. Anyway, overall market expects to trade positive today. Let's see. About the things to look out. First, early morning, lots of Chinese macro data such as industrial production growth, unemployment rate, etc. all are due. During our market hours, around 12:30 to 1:30, UK inflation, Germany's wholesale inflation and France consumer inflation all are scheduled to release. Then in the aftermarket hours, first Europe's industrial production data is due. Then in the night, US wholesale inflation data, core retail sales data and oil inventories data are some of the items we need to keep an eye out today. Coming to technical, first on Sunday, Nifty increased over 19,500. I mean, it's kind of understandable. There was no FII since Sunday and even our Indians, most of them might bought the stock as a sentiment. Because of all those reasons, Nifty closed above 19,525. Then on Monday morning, it's a regular day. So that premium was removed. So Nifty opened 40 points gap down and it was remained under pressure throughout the session and closed negative 82 points. Thus, on the daily chart, it formed bearish candlestick pattern with a lower shadow. Just for info, last Friday, US market closed over 1.5% positive. So, most of the investors on Monday expects Nifty to give breakout from the long October 23rd candle, which was holding Nifty in the last 7 trading sessions, but it was another failure attempt. However, because of this yesterday US inflation positive, Nifty expects to open at least 200 points positive today. So if it opens, then that will be a breakout from the long October 23rd candle. Thus, on the top side, the next immediate hurdle is at 19,680 and the strong resistance is at 19,850. Again, I am telling this on the assumption that Nifty to open over 200 points positive. Then on the downside, October 23rd candle top 19,550 to 19,570 will be the immediate support. By an extreme rare chance, if Nifty opens below 19,550, that 19,550 will act as the immediate resistance, whereas on the downside, 19,300 is the strong support to look out for. Then on the Bank Nifty on Monday, it too closed on negative and also in the last 7 trading sessions, it was stuck in the range 43,500 to 44,000 and in the last 4 trading sessions, it did try to break out 44,050 but it can't able to close above. However, today similar to Nifty, Bank Nifty expects to have gap up opening and breaking out the 44,000. If it happens, then 44,000 is the immediate support. And the next strong resistance is at 44,600 to 44,700. But again, for one or the other reason, it opened lower means then 44,000 is the immediate resistance. Then on the downside, 43,450 is the strong support. On the weekly options front, on Monday, 19,500 strike maintained the maximum call option open interest, followed by 19,600 strike. So all those call options writers will be in trouble and expects to have cover today, which in turn will push the Nifty further upside. But for now, new maximum call option writing is also at the similar strike price, which indicating that 19,500 to 19,600 seems to be critical resistance area for further up move in the Nifty. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.